What's going on, guys? It's Andy here. Welcome back to another episode on the Andy Kandola Show. So what do we got going on today? I'm going to go ahead and share with you guys exactly how much I make from my portfolio and how much I've made so far. Now, there are three different ways, guys, I'm making money out of this portfolio. Now, if you're new to this channel, I basically focus on a dividend growth strategy. I call this portfolio my bucket list portfolio. All the stocks in this portfolio do pay me out in dividends as well as in the growth of the stocks that I do have in this portfolio. Plus, there's one other way that I do go ahead and make money from this portfolio. So I will go ahead and share everything with you guys in this video. Now, just jumping into this portfolio, I do have many different stocks in this portfolio, and I do have it broken up in regards to the 11 different sectors within the S&P 500. Now, here's the thing, guys. I use M1 Finance for this portfolio, and M1 Finance is basically one of the best apps to go ahead and focus on long-term investing. And why it's really good at long-term investing is because you actually only have 2 windows to go ahead and trade during any individual day. So you cannot just trade throughout the day. You cannot day trade with M1 Finance. You basically can only trade at 9:30 Eastern Time or 3 p.m. Eastern Time. Now, this actually, personally, I think is a great thing because it does show discipline, and it does actually discipline you to think of the strategy as a long-term strategy. Now, if you are interested in M1 Finance, I do have an affiliate link. Just got to do a quick plug here because they are actually doing a $20 limited time offer where if you sign up right now, you will get $20. Normally it's $10, but for the rest of September, they are making it $20. So if you do want to check that out, go ahead and check out my link in the description down below. But now let's go ahead and jump into this. The portfolio is broken up into the 11 different sectors. Now, I do weigh differently in every single sector. And the nice thing with M1 Finance is you can actually divide the sectors up and allocate a certain percentage to each sector. So I do have 24% of my portfolio allocated to technology, and then going down from there, real estate at 14%, financials at 11%, communication services at 11%, consumer staples at 11%, utilities at 7%, healthcare at 7%, consumer discretionary at 6%, industrials at 6%, materials at 2%, and then lastly, energy at 1%. Now, I do like to diversify in all 11 sectors just because in case one of these sectors goes ahead and has a bigger boom or the market corrects itself like it is doing in the technology sector, I'm not 100% weighed in the technology sector. So it does go ahead and let me diversify as far as my income goes. And some of these sectors pay out higher in dividends, and some of these sectors focus more on growth. But all the stocks in this portfolio actually do pay me out in dividends. Now, as we jump into how much I'm actually making on this portfolio, I did want to go ahead and share with you guys the current buys that I'm doing in this portfolio right now, as well as some of the dividends that I'm actually getting or I've gotten the last couple weeks here. So if we go ahead and look at the 8 companies that I'm actually purchasing today, what I've actually done is I've allocated $200, and usually what I'm doing with this portfolio and my strategy has been to dollar cost average. I'm putting anywhere between $600 to $1,000 a week because I do want to go ahead and grow this portfolio, and my goal is to go ahead and get this above $100,000. Now, these are the stocks that I'm actually investing in right now. I'm investing in Waste Management, Costco, Walmart, Cisco, Lynn Corporation, Hormel Foods, Clorox, and Procter & Gamble. So these are currently the stocks that I'm basically allocating towards. Basically, what I've done is I've allocated $200 towards my bucket list portfolio, and it's just allocating it based on the target allocations that I do have. So that's how it's investing the money. And if we just go ahead and look at some of the dividends that I've actually recently got in this portfolio, I did get a bunch of dividends just in the last couple days here. So just in the last week, as you guys can kind of tell here, I got dividends from Microsoft, ExxonMobil, Chevron, Moody's Corporation, Southern Company, Johnson & Johnson, Honeywell Corporation, Visa, American Water Works. Now, these are just some of the dividends that I just got in the month of September. So this is a great way to go ahead and build income by focusing on dividend stocks. Now, in regards to how much I've actually made in this portfolio, there's 3 different ways that I'm actually making money in this portfolio. Now, the first way is gonna be in regards to the actual dividends. Now, the dividends, as we can tell, this is what I've gotten in the month of September. But a tool that I actually use is through a site called Simply Safe Dividends. Now, with Simply Safe Dividends, they do have an annual subscription. I believe it's $3.99. At this point, I have gone ahead and signed up for this. this. They do have a free 14-day trial, but the reason why I really like Simply Safe Dividends is because you can actually tell the safety scores on many different companies. So if I click on a company like Apple, I can go ahead and do research. I can tell the dividend safety score of the company, the dividend yield, the dividend growth rate, and it really just summarizes and keeps information very user-friendly. So I really do like Simply Safe Dividends for that, as well as you can go ahead and track your dividends. Now, if we look here, guys, my annual dividends, and this is the first way that I actually make money in this portfolio, is I am making $1,635 annually just from the investments that I have invested in my portfolio. And as we can tell here, in the month of September, I'm expecting $164 in dividends, October $98, November $146, December $147, January $114, and then so on and so on from there. Now, a lot of companies do pay out their dividends on a quarterly basis, and that's the reason why we're seeing a big fluctuation here. But the nice other thing is it's actually telling me on September 15th, these are all the different dividends that I'm actually going to be getting on just the 15th. So I'm getting dividends from Nexstar Energy coming in, McDonald's, Realty Income, which is actually one of my higher holdings in my portfolio. So I'm getting about $21 in dividends from them. Main Street Capital, Pembina Pipeline, and Duke Energy. So these are all the different dividends I'm getting in this portfolio. Now, I personally really like this strategy because here's the thing. As long as I'm holding these companies, I'm getting this annual income. Plus, if we go ahead and just look at the dividend growth in regards to just holding on to these investments, let's say I don't put any more money in this portfolio, the nice thing is I will actually see a growth in my dividends every single month. Now here it's showing me that if I had invested in these stocks in 2008, I would have had $772 in dividend, and based on my average rate of return at 7.1%, this is how much my dividends have been growing. And here's the potential. It's actually showing me that my current dividends is $1,635, but based on the projected growth, which I do believe I have a bit higher growth in my portfolio as far as the dividend growth rate, but in the next 5 years, if I just left this alone and left this portfolio alone, I will be making $2,308 annually. And then if we look at the overall 20 years, in 20 years, if I just left everything the same and not even reinvested, I would have $6,493 that I would be making on dividends just based on the dividend growth. So guys, that's basically why I like to focus on this strategy, and I like to focus on a dividend growth strategy, because I'm making this money in dividends, as well as I have the potential to go ahead and grow these dividends over time. So eventually I can just go ahead and retire and have these dividends go ahead and pay for themselves and pay for all my living expenses. But let me know what you guys think in regards to this dividend strategy. Now, the next way that I actually do make money from this portfolio is from the actual growth of that stock and the stock price. Now, here's the thing. This is probably the riskiest way to go ahead and make money short term, but long term, this is actually the best way to go ahead and make money and to accumulate wealth. Here's the thing. When we look at the stock market over time, the stock market always tends to go up. And if I just look at, in general, the Dow Jones in the last week has been down. But here's the trend, guys. If we go ahead and look at the all-time on the Dow Jones, look at this. Since 1985, if we just look at the Dow Jones, the stock market has always gone up in price. Yes, we took a couple dips. We took a dip around the 2000s. We took a dip around 2008, 2009 when we had the stock market crash. And then we did take a dip when this pandemic happened. But overall, as long as you invest in the stock market for the long term, and the strategy is to go ahead and leave the money in the market to grow over time, the stock market is always going to go up. The way I like to go ahead and think about this is, do I need to worry about the next day, the next week, the next month, the next 5 years, 10 years, or 20 years? I'm not worried for the short term. Where do I see the stock market in the next 10 to 20 years? And 100%, I can tell you guys, because I believe in the US market so strongly, the stock market is 100% gonna go up in my opinion. So in regards to my portfolio, now in the last day, I'm actually down a pretty significant amount in this portfolio. I'm down $1,048 or 1.75% in my portfolio. Now that to me is a lot of money, and I've lost probably around $1,700 on my worst day in this portfolio, but losing $1,000 does hurt and it does sting a little bit. But the way I look at it is just think back to, am I worried for the short term or the long term? So in the last day, I am down. Just to show you guys the last week here, the portfolio is down $1,399 or 2.36%. In the last month here, the portfolio is down $344 or 0.63%. In the last quarter, the portfolio is up $1,975 or 4.25%. And here we go, guys. If we go ahead and look at the all-time and how much I've made, and this is the second way that I make money from this portfolio, is all-time I am up $5,068.28 or 15.50%. So this is basically how much I've made in regards to the growth in my stocks in this portfolio. Now, as we can tell so far, because I started this portfolio about mid-year here, I have earned in total $469.33 in dividends. So both of these strategies are working really well together. And now just jumping into the third way that I actually do make money from this portfolio is the tax benefits that I have by investing in stocks. Now, here's the thing. This is probably one of the hidden ways that a lot of people don't think about, and something that I truly did not think about short term when I was investing in the stock market. But by investing in stocks, when you go ahead and have earned income or you have earned dividends in the portfolio, or let's say you go ahead and sell a stock, you have a profit, you do have to pay taxes. And the third way that I actually earn money in this portfolio is by actually not paying taxes or finding strategies to go ahead and not pay taxes on the earned profits in this portfolio. Now, there is two different ways that I go about this strategy. The first way is all the earned dividends. So for example, in regards to this, I have earned dividends of $469. Now, I do have to pay capital gains tax, which in my case is right around 23% on these earned dividends. How do I go ahead and offset this? Now, I don't know if this is a little trick, guys, that I've kind of discovered, but I'm going to go ahead and spill the beans here and share this with you guys. In regards to the earned dividends, because you do have to pay taxes on earned dividends, but let's say that you have losses in your portfolio, or let's say that there's currently holdings in the portfolio that are taking a loss. I can go ahead and sell those stocks that are losing me money and go ahead and take those losses to offset the gains. Basically, in regards to whatever profits that I've made in this portfolio, when it comes down to the end of the year, let's say it comes down to December and I still am showing a capital gain in my portfolio, I can go ahead and sell some of the positions and some of the stocks in my portfolio and look at the stocks that are actually down the most that I maybe just want to go ahead and get rid of, so I don't have to pay taxes at the same time. And at the same time, I'm just able to go ahead and eliminate that stock from my portfolio because I no longer want it in my portfolio. Or if I do want it, I can still go ahead and sell that stock, take a loss from that stock, and go ahead and buy that stock next year. Basically, just to sum this up, if I'm losing money on a stock, now, for example, if I'm looking at a stock like in my energy sector and the stock is actually losing me money, and let's just take, for example, a stock like Chevron, where I'm losing $71.54. When it comes down to near the end of the year, if I go ahead and sell the stock and I go ahead and incur a loss of $71.54, I can go ahead and take those losses to offset any capital gains, so I don't have to pay taxes on any earned dividends or any earned gains from my positions that I've made a profit on. So hopefully I was kind of clear on that, guys, and that's one way that I go ahead and do earn money in my portfolio, because I don't have to use that money to pay taxes, and I can go ahead and invest that money and grow that money by reinvesting it in the stock market. Now, the second way in regards to the tax benefits here is going to be by investing in a Roth IRA. Now, I do have a Roth IRA as well, and in regards to a Roth IRA, you actually don't have to pay any capital gains tax as long as you go ahead and hold stocks until retirement or until the age of 59 and a half. Now, here's the thing. Anything you invest in a Roth IRA, when you go ahead and invest it, as long as you hold it till retirement, anything that you've gained, so in regards to my case, all the money that I've gained, or so far I've gained $1,491, I don't have to pay taxes. I can go ahead and actually take out the money and take out all my earnings and all the profits without paying taxes. But the caveat to that is you do have to hold it till retirement. The additional thing with the Roth IRA is you can only invest $6,000 in a Roth IRA every single year. So this is actually one of the only type of retirement accounts or an investment account that you actually actually pay $0 in taxes, but the caveat is you do have to hold it until retirement. But guys, these are basically the two separate ways in regards to the tax benefits and how I make money in regards to using taxes to my advantage. So hopefully you guys enjoyed this video, and these are in total the 3 different ways that I make money in regards to my portfolio and in regards to investing in the stock market. I'm hoping you guys did learn something in regards to this video. If you did, if you don't mind smashing that like button, as it really does help, guys. YouTube seems to love that like button, and it just helps keep me motivated to keep producing more videos like this. But thank you guys for watching this video. If you're new to this channel, don't forget to subscribe down below to keep up with the channel. And if you are interested in M1 Finance, check out my description down below, as well as if you're interested in a couple free stocks, I do have a couple links in the description where you can get 3 free stocks, one with Webull, second with Robinhood, and a third free stock with Public. It's free money at the end of the day, so to me, I say why not? But thank you guys for watching. Until next time, see you guys at the next one.